All right, good morning. Today is Tuesday, June 25th, 2019. This is the stock market today presented to you by Chaikin Analytics. Gives our view of where the market's going today and what's happening. You may be able to tell if you're a regular viewer that this is not Dan Russo. This is Nick Webb. I'm in for Dan Russo while he's on his honeymoon. So if you see that Twitter handle down there of @Dan_Russo_CMT, well, go on, make sure you follow him so you can follow all of his honeymoon pictures that are coming across his Twitter feed right now. But when he returns, he actually does provide a lot of great insight into the stock market. So what's going on? Yesterday was kind of a dull day. It was sort of resistance holding at 29.50 for the most part. Energy, consumer discretionary, and healthcare were the losers, which actually seems like they were giving back some of their big gains from the prior week. Materials and consumer staples, on the other hand, were exactly the opposite. They actually had a very good day and hadn't had as good a week the prior week. So it's sort of a change in position. Just one note is money flow continues to be weak. That's something to keep an eye on because it's not nearly as serious as it was in Q4 of last year. But you can see when there's a little dip in money flow, there often is a dip in the market. So keep your eye on that as we go forward. It's pretty close to flat right now, but as you know, Chaikin money flow monitors institutional support of a equity or an index, and you can see it's sort of flagging right now. So key points, as we already said, the market ends mostly flat. You can see that reflected over there in the results of the major indices. Dow barely moved up, S&P barely moved down, NASDAQ was absolutely unchanged. You don't see that very often. The one exception is small caps continue to underperform. So I kind of feel like there's a mean reversion at some point because they've been underperforming for quite some time. And at some point, there's going to be some built-in energy in small caps. But for right now, they continue to underperform their large cap brethren by a pretty substantial margin. And you can see they were down over a percentage point yesterday. The big news hitting the market right now is that AbbVie is closing up on their merger with Allergan. And so there are some pretty intense moves in the pre-market. And in general, there's several major new pieces of news that'll come out over the next 2 weeks. One is the upcoming earnings season. I think everybody's a little on pins and needles about that, as it will be the second quarter in a row of negative earnings growth year over year for S&P 500 companies. And the big news over the weekend was that it is now reported by FactSet that Q3 will also be, or is looking to be, negative earnings growth. So that is 3 quarters in a row if that comes to pass. So needless to say, earnings is causing some consternation. The trade wars should see some movement this week. During the G20 meeting, Trump and Xi will sit down and hopefully hammer out a better arrangement than what they've got right now, which is tit for tat, tariffs, and all kinds of just nasty stuff. Chinese are particularly upset about the addition of 5 additional companies in their sort of blacklist category. Finally, next week you'll get another round of employment data, starting with Wednesday, the early look from ADP, and then the real employment report on Friday. Last month's employment report was not a particularly good one. As a matter of fact, it was very low. So there will be all kinds of examination of this one. And in particular, they're going to look at wage data, because if wage data continues to be benign, then that really will cause the Fed reason for a cut coming up. The other thing that is just staggering right now, or sticking out, is that gold is at a 6-year high. And if you take a look at the chart, which we will later on, it is just a chart to behold. Futures are, again, sort of pretty flat. So nothing to report there. Stock of the day is Apple Hospitality REIT. This is a REIT that has a 7.5% dividend. So for those of you that really like income, this may be for you. Let's walk through what we feel, or the way that Chaikin sort of reads these charts. So if you look at the top right or top left-hand corner, you can see that we've rated this neutral plus. In Chaikinese, that means that that is a stock that we would view as bullish, and you can sort of see from the power gauge constituents, it's got a lot going for it in all the direction. But since it's unable to break its long-term trend, it's actually trading below the long-term trend. Rather than rate it bullish, we rate it neutral with a positive upswing. And this basically tends to mean, hey, it's a good stock, but there's increased risk in owning it. And so you look down here, and that's the trend. You can see, by and large, we've been pretty bullish on this stock since January. However, the relative strength has not paid off the last few months while the market's been rocketing. And again, that's pretty much consistent with high dividend stocks. They've been treading water. Money flow really doesn't have any direction. So if you think about it, Chaikin likes the stock. Relative strength, the market does not particularly like the stock, and money flow, which is the smart money, really hasn't formed an opinion. So that's the story with Apple. So where have the sectors been going? You can see technology is now on top over the last 5 days, with energy a close second. Obviously, with oil prices, that's been a real trigger for energy stocks. And down at the bottom, you can see real estate, and we just talked about all the reasons why. They've been lagging the market, and they continue to lag the market. Now, that will change at some point, because as interest rates go down, long-term rate, the 10-year treasuries at 2%, people will start looking for yield. And utilities, for instance, and real estate REITs very well might be where they end up. Now, the industry focus, this is, we sort of cycle through all the industries that are in Chaikin Analytics. You can see we view the aerospace and defense services as a real positive. You can see 16 are rated bullish or very bullish, and only 2 are rated bearish. So that's got a ratio of about 8-to-1, which is, really pretty bullish rated for the whole industry. And you can see it has absolutely outperformed the S&P 500 by a whopping 13%. So this is number 2 of 21 subsectors. A lot of great companies in here. Here are some typical ones. Arconic, which was a spinoff from Alcoa. You've got Wesco Air, and then Astronics. Well, given that we have now had our 5th branch of the Defense Department, the Space Force, I figured what better way to celebrate that than look at Astronics. And so again, here's another view of what we see in Chaikin Analytics. Very bullish stock, great financials, earnings, technicals, and experts. You can see we've been bullish on it since April, and the stock has definitely rewarded that viewpoint. So again, going through this, relative strength is pretty solid. So this is a stock the market likes in addition to Chaikin Analytics. But Chaikin Money Flow has been sort of and sort of view them as the Russian judge. So you've got 2 thumbs up and the Russian judge with the negative rating. In terms of what was moving yesterday, well, for those of you that play video games all day in your basement for the last month, yesterday was your day, because 2 of the big movers were Electronic Arts and Activision with 3.85 and 2.7 respectively. The other one of note is Newmont Mining, and again, that's a move in relation to gold prices going up. So that one has been really driving the market, gold prices for mining companies. On the flip side, you've got Bristol Myers and Celgene.